Hi everyone, welcome to this week's Stockscores Market Minutes. Market leader NVDA announced earnings this week and they were great, and yet the stock went down. Now you add that to the fact that September is historically the worst month of the year for the stock market, and I think we should have a little bit of concern that we could see a correction, a crash in the month of September. So this week, I'm going to walk you through whether that's likely and why it would be likely and how to know that that's coming. Now, of course, I will keep you updated each week, so make sure you're subscribed to the Stockscores YouTube channel. In addition to my look at whether there's going to be a crash in September, I will also talk about the markets overall. We'll look at the stock markets, commodity markets, bond markets, currency markets, crypto. And then finally, I'm going to look at the trade of the week, a stock that made a huge run on Friday in a pretty slow market, and yet there's still these stocks virtually every day that move up more than 100%. And just another example on Friday, and I'll show you how I found it and how it was traded. All right, so let's jump into this week's topic. Is there going to be a stock market crash in the month of September? Again, as I said, market leader NVIDIA went down on good earnings, and September is the weakest month of the year. So what are the signs that the stock market is going to crash? Well, there's a couple of things we want to watch for. First is the formation of a falling top, and second, the break of an upward trend line. So let's look at the charts of the S&P and NVIDIA and see what they show. The first chart is NVIDIA. And what you can see there is Thursday, Friday after earnings, the stock went down. And again, it's important to recognize that NVIDIA's earnings were great. They beat expectations. The reason I think that NVIDIA is going down now is simply the old buy the rumor, sell the news. You see, the market broke this downward trend line right here. And since May, it's been rising quite steadily, moving from $100 to $185 almost at the highs a couple weeks ago. And so it's just going to be some profit taking. When the news comes out, people that were holding in anticipation of good earnings no longer have that reason to hold. They're now saying, okay, the news is out, I'm going to take my profit and run. And so that's what creates this sort of selling pressure even when the news is good. It could also be that expectations for the future aren't quite as strong as many thought, but I do think it's worth being a little bit concerned about because we do have this top here and another sort of a double top there, and we're breaking this little upward trend line that goes back into here, breaking it right there on Friday. So I want you to be fairly cautious with NVIDIA. I don't think it's a strong sell signal, but I do think it's a minor one, and if you're more of a trader, then you might want to take the money and run on that stock. Now let's take a look at the overall market. This is the daily chart of the S&P. And in just a moment, I will look also at the 3-year chart and the 1-month chart, just to give you the short and long term. But sort of the medium term chart is the S&P 500 SPY here is still strong. The bottoms are rising, buyers are in control. And until this upward trend line gets broken from a falling top, and again, we don't even have a falling top yet, so there's a lot to wait for before we get too worried about the market. So it's still bullish. I think we should always watch for signs of weakness, but at this point, there's really nothing there. All right, let's jump into the Stockscores website and do our analysis. And just a reminder, I keep telling you guys about this every week, but more and more of you should subscribe to this free weekly newsletter. I pick stocks in that newsletter, and historically, they've done pretty good. We continue to have some big winners with those free newsletter picks that I do, and plus I teach a little bit about the market. So you can register for the weekly newsletter at stockscores.com at that area that I just circled. All right, let's get into the charts. We'll start with the S&P chart, and we'll go to the 1-month chart here. This is the very short term. And you can see the bottoms are rising. The pace that the bottoms are rising is faster than the pace that the tops are rising. And so that means that the momentum is starting to slow. That's a small area of concern. It's not a major one yet, but if we start to break down through this floor, you have what's called a breakdown of a falling wedge, or a rising wedge rather. That's a little bit negative. Now if we go to the 3-year chart, you can see that we're still in that upward trend. Here we had the first little corrective action in the spring. That was 5-6 weeks of weakness on tariff talk and that sort of thing. Markets made back all those gains. It's getting close to the top of that channel. I didn't draw that very well, but starting to get there. I don't see any major cause for a concern in the S&P 500 chart. Now, the NASDAQ chart, QQQ, has a little bit of an issue because we did build this falling top here. And again, this is tech primarily. And if we break this upward trend line, we may get a short-term move to the downside as perhaps investors take some profits on that in that tech market. And I'll talk in a minute why I think that could happen. I think it's not so much weakness in the NASDAQ, but perhaps a rotation into other areas of the market. And with that in mind, let's take a look at IWM, which is the small cap group. And this has been really lagging the large cap group, particularly the tech stocks, but it's actually been doing pretty well the last few weeks. And the reason is investors are starting to think that the Fed could lower interest rates. Now we're going to look at an important chart for interest rates in just a moment. But if the Fed lowers rates, that's good for small cap stocks, and it may mean that money moves out of the large cap tech stocks and into these small cap stocks. And I think that's why they're starting to outperform the names like NVDA, Microsoft, Apple, that sort of thing. All right, let's take a look at the Canadian market, T.XIU. Then we'll jump into commodities and currencies. Canadian market, very strong. Go to the 3-year chart. You can see the trend is up, even though the Canadian market is the subject of a lot of tariff talk from the US. The stock market seems to be shrugging it off and buying US or Canadian stocks in general. One of the reasons is gold. Gold is starting to perk up again. You can see it's been going sideways for the last 4 months, and I've sort of had a neutral rating on it for that time period. But now it's starting to break out again, and we're doing so from the formation of rising bottoms. So you've got optimism building here because you've got rising bottoms, and you're starting to move through resistance, and that could culminate with a break to the upside, an even stronger one than what we've seen so far. Now, oil is another important commodity for Canada, and it is very choppy, very volatile, which means investors are uncertain. Anytime you see a lot of volatility without a trend, it means investors don't know whether they're coming or going on that particular instrument. So in the case of oil, I think that's the case. It's got a little bit of falling tops, but it's also got some rising bottoms. I call that sort of a neutral chart, but one that's difficult to predict. And if you look at the 3-year weekly chart, it's much the same. It gets up to the top of this range here and gets stuck and gets to the bottom and it bounces. And right now we're sort of in the middle. All right, let's move along to currencies. We'll look at the US dollar, which has been moving lower and is now starting to stabilize. We need to see it break to the upside as an indication that the buyers are interested in it again. So even though the US stock market has been going up, the US dollar has been going down, and that takes away from the returns of investors around the world who are investing in the US stock market because, you know, the drop in the currency is hurting them a little bit. All right, now here's Bitcoin, and Bitcoin's been sort of suffering the last few weeks. You can see here this weakness, and now we're breaking this little trend line. We broke this one first. It's starting to generate some weakness. You see it more on the 1-month chart where you've got those tops that are falling. We had rising bottoms and now we're starting to build falling tops. So short-term concern in Bitcoin. Now the last chart we're going to look at is that of the bond market, and this is TLT. It is stabilizing and we're building rising bottoms. If we can see the bond market break through this level, which on the ETF is 88.5 roughly, that would mean that the bond market is moving up, therefore interest rates are moving down, and that tends to come in anticipation of a drop in interest rates by the US Federal Reserve. So that again would be good for small cap stocks and something to watch for. All right, so my ratings then, everything bullish for stocks except for I've lowered my short-term rating on the NASDAQ to neutral. Oil and US dollar neutral on both time frames. Bitcoin, I've dropped it down to bearish in the short term. There's some selling pressure short term, but the long-term picture still okay. We've got that at neutral. And then bonds, neutral on both time frames. All right, now let's take a look at the trade of the week. This is an example of what we do in our active live service at Stockscores, where we are day trading the market, swing trading the market, looking for those alpha stocks that make the big moves every day. And one of the clues that a stock is going to make a big move is the abnormal activity. So when a stock starts trading abnormally, we want to watch it. And then what I then do is look for those stocks to make abnormal price and volume moves on a very short-term time frame on the 1-minute chart. And so if we look at this chart here, you can see there's pink and yellow dots on some of these candles, and those occur when there is an action candle. So any of these pink and yellow dots is an action candle. Now, I like action candles that break resistance. So if you've got a trend line of resistance and we break that, we see it go up. Got a little trend line of resistance, break that, and it goes up. You don't want action candles that have come at the end of a trend. So we ignore those ones. But here you've got a downward pullback. You've got a break of the trend after the build of a rising bottom right there, and you get another nice move. You know, that is from, what is that, about $7 up to $10.50. So a 50% move in, I don't know, about an hour, not even an hour on that stock. So we were trading this stock a few different ways on Friday, and it all starts with abnormal activity and then the break from low volatility on those action candles. If you want to learn more about that, you can go to my website, stockscores.com. Go to the trader training section. You can watch some videos and things like that there. Well, I hope you have enjoyed this week's video. We'll be watching for a crash, so make sure you're subscribed and I will keep you updated on that. For now, I think we're fine. And we'll look next week again at the different charts that we've looked at this week. Hope you've enjoyed this week's Market Minutes, and as always, trade well.